Hi everyone, Darko here and welcome to my Day Trading Academy. We had a pending order on Aussie Yen this week and I will talk you through the reasons behind it. Okay, so this was the entry with the low stop loss. Let's see how things went. We got filled within this candle and we are still in this trade. And the reason behind that trade was we start always with a monthly chart. This level was consumed on a daily chart and my bias was up based on the monthly chart, and when my bias is up I go down to my day trading template and look for a reason to buy this pair. So the reason to buy this pair was basically this is a very strong level of support and resistance, in this case support, because price was dealing above that level. So this level happens to be also a daily identical neckline. Let me just see here. Yes, this level in here. So it's a very you see how price went up and then we just dropped like no tomorrow on both daily and weekly. Okay, so price is, we actually had a pending order in here that turned out to some took break even, some took reduced loss or full loss, depending how you manage it. You had actually 3-4 hours to exit that trade at break even. So we had a new entry in here, as you saw from my screenshots. So this was the entry with the low stop loss. The risk was 26 pips. By the time price hits this strong level of resistance on an hourly chart and opposing level, price was up over 30 pips, so you took something off. We usually never move our stop loss to break even, so my stop loss is still below the entry swing, and let's just see how things goes. And this was the reason for this trade, and obviously we are aiming for the targets that I have for our clients, and time will tell if we hit those targets, final targets. And we also had a reduced loss on EuroCAD this week. Okay, thank you so much for listening and have a great day. Cheers.